and welcome back everyone to Moneycontrol live stream. You're watching markets with Santo and CJ, minus CJ, who will be back with us tomorrow morning. Well, the markets appear to be set to close lower. Yesterday's rebound has not really sustained at higher levels, and that does not come as a big surprise considering that overall the outlook, the sentiment in global markets is quite jittery, and back home some of the macro indicators too are not giving much room for comfort. We are still seeing some fair bit of domestic money coming into the market, and probably that is what is helping markets to rebound. In fact, the Nifty was down by over 150 points, close to about 150 points at one point during the day, but since then it has managed to trim some of its losses. Pretty volatile session, and that's been very much the feature for the last couple of weeks. But however, you're seeing some kind of selling now creep into mid cap and small cap stocks. They are the ones where you're seeing maximum selling pressure coming in, and not really surprising considering that these stocks had also witnessed the sharpest run up during the recent market rally. Well, the Nifty and Sensex had been falling for the last 3 days. It managed to come back yesterday, and today it's again set to close in the red. So today will be the fourth session that it is closing in the red out of the last 5 sessions. And the big losers today mainly are from the banking, realty and auto sector. Banking and realty in particular, because these two sectors are pretty sensitive to interest rates, and now that inflation is at a 5-month high, there are concerns that RBI could take a more hawkish approach at its next credit policy. Besides that, among the key outperformers today, you have HCL Tech, which is a big gainer in Nifty stocks. The company came out with a strong set of second quarter numbers. Numbers were much better than what market had been expecting, and because this stock had lagged some of the frontline IT stocks, probably there's some bit of reversion to the mean, as my friend CJ often likes to call it. But whether this can sustain again remains to be seen. The company has increased its revenue guidance for the full year, the upper end of the revenue guidance. However, the margin, it is slightly tweaked, yet the street is divided whether the company will be able to meet its full year margin guidance. There has been a recovery nevertheless, but some like JP Morgan has called it the margin guidance quite ambitious. Wipro, on the other hand, is the biggest loser in the Nifty. The stock is down close to about 6% after the company's quarterly earnings fell short of market expectations. In fact, the guidance that the company has given has led some like Nomura to say that it's already alluding to a possible slowdown in the quarters ahead. Well, that said, let's take a look at some of the stocks on our watch list this afternoon, starting with India Cements. It's been quite a volatile stock over the last 3 or 4 months. It had hit a high of about 254 in April, then crashed all the way to 150 in June, and from there it again doubled to about close to about 300 till last week. Now, once again it's under pressure. Now, earlier this week the company had said that it would be selling its Madhya Pradesh operations to JSW Steel, and it stands to get close to about 477 crore from that sale. However, the news does not appear to have been taken very positively by the market, but a better explanation possibly could be that a lot of speculative positions had been built up. Possibly some people who would have already known that such a deal was happening would have built huge positions, and now that the news is out, those positions are being unwound, and which is why you are seeing a very sharp correction in the stock. It's now fallen to close to about 230 rupees. It's been falling one way since the announcement was made this Monday. Now, the big concern for India Cement is that compared to other cement players, its performance, at least on the fundamental side, has been quite patchy. Revenues still are below pre-COVID levels. Now, when you compare that with stocks like Ultratech or Shree Cements, the revenues have crossed the pre-COVID levels. That's not been the case with India Cement. Also, in the case of India Cement, the margins had taken quite a bit of a beating during the first quarter. It had fallen as low as 3%. Now, remember, the second quarter earnings are also not likely to be a surprise, a positive surprise for most cement companies, because fuel costs have remained high, and cement companies typically tend to carry some bit of inventory to hedge themselves against price fluctuations. Besides, also the second quarter is a slack season for cement companies, because construction activity usually goes down considerably because of the monsoon season. So, no major surprises expected in the second quarter earnings from most cement companies, and that being the case, India Cement stock could remain under pressure for some more time. Next stock, Escorts Kubota. Now, this stock too had seen a good run up, again has been quite volatile because of the open offer. It had fallen sharply after that to around 1600 levels. From there again it topped 2000 rupee levels. The first quarter numbers was quite disappointing, steep fall in margin there, and now the market will be keenly watching second quarter numbers for any signs of uptick in the margin. The sales numbers for September has been quite robust. It has been up close to about 37% year on year. Now, if the strong sales have come on the back of lower margins, that is what something that the company that the market will be closely keeping an eye out for. Escorts has three lines of business. One is the main one is tractors. The second one is industrials, and the third one is railways. Now, the railway segment is also doing pretty decent, but it is ultimately the performance of the tractor segment that will matter to the market. Now, after the first quarter numbers, many analysts had come out with sell recommendations on the stock, and interestingly the stock managed to do well despite lot of negative recommendations from analysts. That was quite surprising. The management has sounded quite positive. It admitted to some of the mistakes that it had made during the first quarter, but said that they would reverse those and the effects would be seen in the second quarter earnings. Now, that is something the market will keep an eye out for, although the stock has now fallen below the psychological level of 2000 rupees. Next stock on our watch list is Hindalco. The stock has been pretty firm today in today's weak market. Now, there have been news reports that the US is considering blocking aluminium imports from Russia. That has led to a bump up in aluminium prices on the London Metal Exchange. Aluminium prices were up close to about 7%. Now, aluminium prices are still a far cry from the highs seen in March immediately after Russia invaded Ukraine. In the case of Hindalco, it is not just about aluminium prices, but it is also about the performance of its group company Novelis. Now, Novelis supplies mainly to automakers and beverage makers, and there the outlook, the demand situation appears to be pretty strong. In fact, Novelis came out with strong numbers for the first quarter and also raised its guidance for operating profit per ton to about $525 while reporting its first quarter numbers. So, overall the outlook on Hindalco is pretty much positive. Again, though, there have been some concerns after Novelis, one of Novelis leading clients, which is Ball Corp, major beverage can maker, had reduced its earning guidance, but some brokerages feel that the problems at Ball Corp could be more company specific than to do with the industry as a whole. So, Hindalco is one of the prominent gainers in the market at this point in time. The next stock on our watch list is Indian Hotels. Now, all these stocks which had seen a good run up are now suddenly coming under pressure, most likely due to unwinding of long positions. They have seen a lot of speculative interest as well. In the case of Indian Hotels, Sher Khan feels that Indian Hotels, the occupancy rate during what was seen during Q1, which is a holiday season and a peak season, that will still match the numbers seen in the second quarter. The second quarter number occupancy rate also will be fairly strong, and then you have the Q3 season, which is again is a very strong season for hotels. But at this point in time, a lot of positions are being unwound. Among hotel companies, Indian Hotel at this point in time is among the best place. It has managed to raise funds at the right time, and also it has set ambitious targets for itself. It plans to add about 300 hotels and take its overall room capacity to about 28,100 over the next 3 years, and it is also looking at an operating profit margin of 33% by FY25. According to Axis Securities, Indian Hotels is likely to throw up free cash of about 1000 to 1500 crores for each of the next 3 years. Also, its capex will be quite minimal at close to about 400 crores. So, much of it should flow into the bottom line, and this is a stock to keep an eye out for. Last stock on our watch list this afternoon is Dr. Lal Pathlabs. Now, diagnostic stocks, the two main diagnostic stocks, Metropolis and Lal Pathlabs, both have taken a beating and among the biggest losers in the market this year so far, both stocks falling by close to about 40 to 50% from their peaks. Now, the main reason for that is with the COVID wave as good as over, the earnings of the companies, both companies are likely to take a hit because they had made huge revenues because of COVID testing. Now, with that stream of revenue no longer there, the company's margins are likely to come under pressure. But this is another bigger reason why the market has suddenly turned so bearish on diagnostic stocks. That is because you got a lot of deep pocket competitors now entering the space, and some of them like Lupin have also a pharma background. So, this is leading market to take a very negative view on diagnostic stocks. They have taken a beating, but over the last few days again you are seeing some kind of bottoming out in these stocks. For instance, Lal Pathlabs has been seeing support around 2,200 rupees. The stock has bounced from those levels twice, and in today's bearish market also it has managed to hold ground. So, this is leading some a section of the market to feel that probably the concerns over competition and the subsequent price war may have been overdone. There is likely to be price erosion in the for non-specialized tests, but as far as specialized tests go, probably the older players in the field like Dr. Lal Pathlabs should have an advantage. At least that is what the market seems to be banking on, which is why you are seeing some buying support in the stock at lower levels. And now, things to watch out for tomorrow. The US CPI reading will be of crucial interest to the market. Now, already market has penciled in a 75 basis point hike by the US Federal Reserve because of the strong labor market. So, to that extent, maybe the US CPI number, the consumer price inflation data will not make all that difference, but if it remains high, then that is clearly a sign of worry, because in the Fed meeting minutes clearly show that the Fed Reserve remains quite concerned about persistently high inflation, and which means that you could see more price hikes in the days to come. And key quarterly earnings expected tomorrow. We have Federal Bank, Shree Cement, Oberoi Realty, Tata Elxsi and Bajaj Auto among the main companies. And a quick take at the market before we wrap up. Overall indices continue to be under pressure at this point. The Nifty Midcap 100 is down about 0.7% at 30,536. Among the prominent losers, Sensex is down about 0.7% at 57,171. Nifty Bank is down by 1.4%. And the Nifty 50 is just about holding above the psychological 17,000 mark at this point in time. Remember, the two key support levels that technical analysts are looking out for are 17,000 and 16,800. Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and please do remember to post your feedback in the comment section below, and we'll be back with you, both me and CJ, for tomorrow's show at 9 a.m. So stay logged on to moneycontrol.com for more updates on the markets.